Welcome to the Baltimore Metro Market Watch, brought to you by Real Estate Business Intelligence and MRIS Company. Let's examine the most recent numbers from the Baltimore Metro housing market, which includes these areas. Compared to the last three recessions, economic growth following the most recent recession is modest. For example, in the 3 years following the 1991 recession, GDP grew an average of 3.2% a year. Over the past 3 years, the annual rate of GDP growth has been only 2.2%. The economy is still adding jobs, but August was lower than most analysts had expected, with only 96,000 new jobs, and the July jobs number was revised downward. The unemployment rate dropped to 8.1%, but that small decline was likely due to discouraged workers leaving the labor force rather than unemployed workers finding new jobs. Over the last 12 months, the U.S. economy has added 1.8 million new jobs, fueled by growth in the private sector. These private sector gains were partially offset by job losses in all levels of the government sector. Slow economic growth is likely the story for the rest of the year. At its September 13 meeting, the Federal Reserve initiated a third round of mortgage-backed securities purchases, or quantitative easing, and extended its commitment to maintain low interest rates through mid-2015. While intended to spur private sector lending, job growth, and support housing's recovery, there is no consensus these actions will have a significant impact, and Congress will have little appetite for legislative activity prior to the November elections. The Baltimore Metro saw a surge in job growth, adding more than 10,000 jobs over the past 12 months. The unemployment rate in the Baltimore Metro region is 7.7%, down from 7.8% in July. Buyer activity continues to grow in the region. There were 2,405 sales in August, up 17.5% from this time last year, and the highest August total in 5 years. New pending contracts also increased, with 2,791 new contracts signed in August, 18% higher than August 2011, and the highest August total in 6 years. Buyers continue to absorb the inventory of homes for sale. The 11,970 active listings at the end of August are 26.4% below August 2011 and represent the first dip below 12,000 listings for any month since March 2006. The tightening supply of homes for sale is driving up the median sold price in the metro area. At $239,900, the median price is up 2.1% from August 2011, the seventh consecutive month of year-over-year gains. While this level represents a decline over $10,000 from July, it's more reflective of the types of properties being sold, with increases in both condo and townhome sales, which tend to have lower price points. And homes are selling faster. The median days on market has dropped 17 days since this time last year to 48 days. Despite the late summer housing market activity, overall economic uncertainty and pending federal actions will likely temper the momentum as we head into the fall. Even with historically low interest rates, demand will likely ease up and price appreciation will moderate as some potential home buyers and sellers retreat from the market. That's the Baltimore Market Watch for this month. Check back next month for the latest.